Well, it's 6:06. We've got a few of us here. We may have some additional people popping in, but I think what we should just do is just get started. So it looks like everyone we're pretty much familiar with. Maybe one or two new faces there. So I'm Kathy Bradley with Keller Williams Realty, and this program it's kind of two parts. So one is obviously a home buyer basics webinar, but it's also the final class for some participants of the Habitat for Humanity Home Buyer Readiness Program. So if you've not heard of the Habitat program, or you've not investigated kind of an avenue to get some help with preparing your credit and getting prepared to be a home buyer, definitely touch base with us after this meeting. I'd love to put you in touch with Shanna Eubanks, who's the homeowner support manager over at Habitat, and let's get you connected with this program. And for everyone else who's gone through, what is this, week 7, 8 of the Habitat Home Buyer Readiness Program? I can't remember how many weeks it's been.
I think we're at 8.
Yeah. So I'm really excited that this is kind of the culmination of the program, and that everybody has had an opportunity to work with the coach throughout the process. And thank you for the coaches who are all here and part of this final class too. So what we're going to touch on tonight is really the final step in the home buyer process, which is actually searching and purchasing a home, right? So at this point, we've already talked about the pre-approval process, credit repair, saving your money for a down payment. If you're joining us tonight and you haven't had a chance to talk with a coach, definitely touch base with us after this class, because we would love to pair you up with the coach and get you financially ready to purchase a home. So what I'm going to do now is go into my PowerPoint. Let's see if I can share my screen. Got one more person joining us. Okay. You guys let me know when you can see my PowerPoint presentation here. Perfect.
Yep, it's there.
Okay. So really what we're going to start with is just, again, like I mentioned, getting you prepared for purchasing a home. So again, if you haven't heard of the Home Buyer Readiness Program with Habitat for Humanity St. Charles, go to their website, habitatstcharles.org, and look up the information for their classes. Get in touch with Shanna Eubanks over there, and definitely we'll pair you up with the coach that can help you get financially ready to purchase a home. Once you're ready to start working with a realtor and looking for a home, I think it's really important to understand what a realtor is. Okay, so realtor is actually a trademark. We pay the right to use the term realtor. And what you want to look for is a real estate agent or a realtor who is licensed, who is trained, who is experienced, obviously, in helping you find a home. They're going to represent you to the strictest code of ethics, and basically their obligation is to you. So find somebody that you like, find somebody that is knowledgeable about the area that you're looking in, and really utilize them as an expert and as a guide in the home buying process, right? They're going to not only show you where to look and how to look, but they're going to be your main advocate for finding a safe, healthy, and affordable home. So a little bit about myself. I am a realtor with Keller Williams Realty. I've been in the real estate world for about 6 years now. And those letters after your name, that really just stands for all of the education that we go through. The biggest thing about being a realtor is continually working with contracts and codes and making sure that we understand the legal world so that we can best represent you when you purchase a home. Okay. Oops. There we go. We're there not only as a legal support, but also an emotional support. Really, buying a home is a little bit of a stressful situation, and so our job is to make it as less stressful as possible and be your friend throughout the process. There should be no fee to use a realtor. We do get paid by the seller, but there are some instances where there are fees that are due to buyer's agents, and so that's part of the interview process, is asking the realtor, what does it cost to work with you? What is the legal contract around working with you? And if at any point you are not happy with the realtor that you are working with, you have the right to terminate your relationship and find somebody else that works best for you. So at no point in your home buying process should you ever feel obligated or pressured to purchase a home, right? This is all about you. So find somebody that is going to definitely support you in the process and not pressure you or make you feel like you're in a situation that you don't want to be in. Okay. Where do you start? So the first step, always the first step, is getting pre-approved for a loan. And there are a variety of different reasons why your lender and your realtor will always tell you to get pre-approved. It's not because I don't want to waste my time, which I don't. I don't want to show you homes and then find out that you're not pre-approved and that we have spent that time where it's not going to go anywhere. But I don't want to waste your time. So I don't want to get your hopes up that you can purchase a home and that you can find something that you love and then find out that you're not qualified or that you're looking maybe above your budget. So it pays to have a conversation with the lender to make sure, one, you're financially prepared, two, your credit's there, and that you're looking in the right area. Okay. Know your budget. And really this comes down to not only financially, but what types of loans that you will qualify for, because that really will narrow down our home search. Okay. If you're qualified for an FHA versus a conventional loan, it will differentiate the types of homes that we are looking for, perhaps the different areas. It may, some people are qualified for more than what they want to spend. And so you really need to go backwards and utilize that mortgage lender as a financial planner, right? Let them know how much you feel comfortable paying monthly so that they can back it up and let you know what that includes in the mortgage, your insurance, and your taxes. Okay, all of that put together equals your monthly payment. So we would never want to put you in a situation where you're purchasing a home that then, with all of those things on top of it, gets above your comfort zone financially. Okay. It also helps us when we are writing the offer to understand what your financial situation is. So do you need to save more money for a down payment? Do you need assistance with the down payment? Do you have enough money to cover the down payment and the closing costs? Or are we now trying to get creative when we're talking with the seller about what types of credits we can get from the seller, or maybe some down payment assistance that we need? As a realtor, I am not responsible for your finances. And so it is for you to speak with the lender and make sure that you are comfortable and that you are qualified within those finances. Okay. It's also sometimes a little bit of a reality check, because you may not know how much you need for a down payment, or you may find out that you need less than what you thought. A lot of people sometimes come to me and say, oh, I don't have 20%. You don't need 20%, but you do need a minimum of 3 to 5%, depending on the types of loans that you qualify for. And then if we can get you a down payment assistance or maybe some credit from the seller, it could potentially be a little bit more attainable than what you originally thought. So really having the conversation with the lender will help us create that path for where to start your home search. Okay. Once you have your finances and situation laid out, you know what your budget is, it's really important to start discussing your home buying wish list with your family. So whether it's your husband, your wife, your partner, your kids, whoever is going to be living with you, you want to sit down and you want to write your wish list of things that you need, things that you don't want, and things that maybe could be a concession item. So a lot of times that comes down to you have to have a fenced-in yard, or you have to have 2 bathrooms. You have to have a minimum of 3 bedrooms, right? If you have 2 kids and you need 3 bedrooms, you're not going to be looking at 2 bedrooms because it doesn't meet your need. Take those homes out of consideration if they don't meet your need, and it'll save you a lot of time looking at homes. Okay. Discuss neighborhoods and amenities. So sometimes you may want to be in a neighborhood that has a pool. You may want to be in something that doesn't have a homeowners association. You want a little bit of unrestricted. Write all of these things down, and that way you'll have a good idea of what you're looking for in your criteria of a home. Okay. A great resource for school districts is greatschools.org. You can look up the grading and the ratings of the local school districts. We do have the ability to kind of narrow the map if you're looking for particular school boundaries, but I do remind people that those boundaries are subject to change. Crime and safety as well. A great idea if you're searching particular neighborhoods is to go ahead and visit the State Highway Patrol's website. They have really great resources there. You can always call the local police department, give them the address or give them the neighborhood, and they can give you a little bit more information on what is happening in that neighborhood. Okay. And then where are you looking for homes? So obviously when you talk with the realtor, they're going to want to set you up directly with the MLS. That's the multiple listing service where all of the realtors are adding and utilizing home data. That data is then syndicated to several websites like Realtor, Zillow, Trulia, Great Homes, all of these website apps, Nextdoor.com and Facebook, those are all syndicated from the MLS. And so really, I remind people that the MLS knows it first. Realtors are going to be the key to inside scoop on coming soons and off-market properties. Zillow is usually the last to know. And Will and I will tell you, it's kind of a realtor inside joke that, Zillow is kind of obsolete in some of those property valuations because it's a computer. It hasn't actually gone to see the home and it doesn't know what people are willing to pay for it. So when you're seeing a Zestimate online, that could be, completely off, the market for what the homes are worth. You really want to work with a realtor who understands the market that in the neighborhoods that you're looking for. Okay. Any questions so far? And feel free to interrupt me if you need to.
Kathy, this is Shauna. I just wanted to say thank you for mentioning looking at the crime statistics or, those resources to look at the safety of a neighborhood. I think that's not something that everybody would think of, and I really appreciate you bringing that up during this.
Yeah, it really, I'm not allowed, we have a lot of obligations as realtors, so I am not allowed to discriminate or to steer you towards or from another particular neighborhood. But I do think it's important for families to do their own research, Google an address or, do whatever you need to do to make sure that it's a neighborhood that you're going to be happy with. So definitely utilize all of those resources from the State Highway Patrol. Okay. All right. There are also some resources when we talk about starting your home search. Talking with the lender, they will put you in touch with down payment assistance programs. And so there are several in the St. Louis, St. Charles County area. The biggest ones right now are Beyond Housing and NECAC, the Northeast Community Action Corporation. They've got various amounts of money that are available depending on the areas that you're looking in. Unfortunately, it's not available in Lincoln and Warren County, but your lender will tell you that there are other loan options like USDA that would work in those areas. So depending on where you're looking and what type of assistance you need, that might kind of narrow down where you're looking for homes too. Okay. And then don't be afraid to talk to the lender or the realtor about other programs, especially if you're a hero. There's a Homes for Heroes program, and there's several other lender options out there that are available for police officers, firefighters, doctors, particularly for loans, first responders, just a lot of different programs. And so don't be afraid to ask if there's a discount or a credit available for you, because there's quite a few programs that are out there.
Ours actually includes educators as well as medical workers. So
yeah, teachers and medical workers. Yeah. The one caveat with the down payment assistance program, and again, I leave this to the lenders to talk to you about. Yes, there is free money for you to help you get into a home and cover that down payment assistance, but it comes with a little bit of a ball and chain, right? If you own the home for more than 10 years, it is generally forgiven. But if you sell the home between 5 and 10 years, you will need to pay a portion of that back. And so what I tell people is to think long term. If you are planning on being in a home for a short period of time, you want to look at the financial aspect of it to make sure that you are getting back what you are investing in the home. Longer term, obviously, it's going to take a little bit longer to gain equity, but you don't want to have to repay back a grant that you thought was free. So if you're not going to be in a home for, 5 to 10 years, you need to think really hard about some of those programs that are available for down payment assistance. Okay. So when you start looking at homes, you have to think, what is the right home for you and your family? And there are several different options for you. Obviously, single family homes make up a majority of what is on the market. They can either be in a subdivision that has an HOA fee or within a regular community that may not. That's up to you and your realtor to really look at those listings and figure out what additional costs come with those homes. Condos, villas, and townhomes, those are within communities that likely do come with additional maintenance or additional landscaping that you don't need to do the lawn mowing every week. Those have monthly or even yearly HOA fees. Neighborhoods that have pools, those will have additional HOA fees. So while you may want low maintenance, you'll need to weigh what comes with it for additional fees, right? The great thing about condos and villas is if they may have a higher monthly fee, but they may have lower insurance. So you'll just want to run those numbers to see how that fits your budget. There is also a lot of new construction happening right now. Payne Family Homes, McBride, there's just a countless number of builders that are building new construction. They have usually a 4 to 9 month process. And to build a custom home, it does require a larger down payment, okay? You'll need to talk with your lender about those requirements. And obviously you don't want to ruin your credit while you're under construction because you don't want to build a home that then you may not ultimately be able to purchase. But there are options in terms of inventory home. Not so much right now, but usually later in the springtime, builders will have inventory homes or what they're calling a home in the hurry. And basically it's already built by the builder, but it's available for really quick occupancy. The one caveat is sometimes they do require, again, a larger earnest deposit or a larger down payment. And so those are questions that you need to ask throughout the process. Foreclosures and auctions, they may seem like a really great deal because they are a low price, but you need to be careful because auctions are generally cash only. Foreclosures have been taken back by the bank and the bank does not want to risk it selling it back to somebody who may or may not, be allowed a loan. So generally those foreclosures and auctions are cash only. Short sales or bank-owned repossessions, they possibly would allow a mortgage, but they may come with possible fees and a longer timeline. Generally, that means that you have to get approval from the seller and then approval from the third party. So it takes a little bit longer to go through the legal process of transferring the home. It might be an opportunity for a great buy, but just be prepared and ask lots of questions. For sale by owner, there are some owners that want to sell their home and they don't want to work with a realtor, or they could be licensed, or they could be an investor. I think it's really important that if you're purchasing a for sale by owner, you still want to use a realtor to make sure that your legal rights are looked out for. Okay, you still want to have a home inspection. You still want to go through the entire process of making sure that the home is safe, because they don't have an agent that is disclosing those things to you. You're working directly with the seller. So while for sale by owners are still, they're still a little rare, they're definitely a possibility, and your realtor can help you look through those. When you're looking at Zillow or the MLS, you will start to see different tags on the properties. So obviously active or coming soon, and then there are pending, contingent, and contingent with the kickout. So really, pending and contingent are the same property. It means they have received a contract and they are waiting either for inspections to be resolved or financing to be resolved. Sometimes if a home is contingent with a kickout, it means that the buyer has a home to sell. And so it's contingent on them selling their home before they can move forward with the process. And there could be an opportunity if you don't have a home to sell and you're ready to close quickly. If you make a great offer, you could potentially come into a property that is already under contract with a contingency and kick them out and keep going towards your new home. So it's not right for everyone, but it's definitely an option if it's a home that you love. Okay. It's also really interesting in this time because there's such few inventory to choose from. If you do find a home that you love, there's a potential to write a backup offer. So maybe they've accepted another offer, and maybe their financing is a little iffy, but they offered a little bit more. Could you write a backup offer on the home so that if that home were to fall out of contract and that buyer loses their financing, you would be the next person in line? The caveat with that is that you do still have to put your earnest money in escrow, and you cannot write a contract on another home while you're in a backup offer. So if it's the only home that you love, it could be worth your time. But if you're continuing to look for other homes, I would consider just moving on and, you know, forgetting about that home that you lost out on. Okay. It's unfortunate in this market that we fall in love with a lot of homes and then you don't get it. So I always tell people, until you have a signed contract, let's not fall too deeply in love, unfortunately. Any questions on that process? I'm going to pull up the chat box here and see if there's anything in there. Okay. All right, this is the home buying process laid out kind of in a timeline. So really the longest part of the home search is looking for a home. It takes a little while for people to kind of figure out, you know, what you like, what you don't like, what's available, what you want to write an offer on. And so I think, you know, really it takes a little while for people to kind of, you know, work through that process, especially if you're a first-time home buyer. Once you write an offer, it goes pretty quickly. So you can be anywhere from 30 to 45 days from closing once you write an offer. Again, that depends on your lender, it depends on the home, it depends on the seller situation. Okay. Let's see really quickly. Just had someone, sorry, I'm trying to let somebody into the meeting. It looks like they're having a hard time getting into the meeting here. Okay, so once you write an offer, the next step is really, you know, the seller can either accept your offer or make a counter offer. Sometimes there's multiple offers that are on the table. So you really want to make a strong offer. You only get one chance to make a good first impression on your seller. And in the case of multiple offers, you really don't have time to go back and forth because they may only look at your offer once. So I tell people, if this is a home that you really love and you're going to cry about missing out on it, make a really great offer. Okay. You'll negotiate back and forth. And once you have an accepted contract, you then have an inspection period. So it's usually between 10 to 12, 15 days that you'll go in and do all your home inspections. Okay. Home inspection, roof inspection, termite inspection, foundation inspection. Sometimes you'll go in and you'll inspect a home and you realize that it needs even more inspections because they found something throughout the process. And so don't wait until the very last day of your home inspection period to get in there, because then you don't have any time left to bring in additional inspectors. Okay. Once you have the inspection completed, what you'll do is submit an inspection notice to the seller, letting them know what you found throughout the inspection process and if there's anything that you want them to repair or credit you to repair. Or sometimes in the house you find things and it's too much for you to want to do the repairs, or there's structural damage that is just going to cost too much. You can cancel a contract. Okay, I really only have 3 ways to get you out of a contract. That would be the inspection period, and then we'll talk about the appraisal, which is next, and then if your loan is denied. So inspections, you'll obviously negotiate the repairs. Once that's completed, you're moving forward in the contract. You're solid that you want this home. Okay. You're going to go ahead and go back to your lender and let them know that you're moving forward with the loan process. They're going to continue to work on underwriting, which means they're getting copies of your bank statements. They're getting copies of your pay stubs, your W-2s, all of that paperwork that they need to verify that you can actually afford this home. Throughout the process of your contract, it gets a little bit deeper into your finances. And they just want to make sure that you have the means in order to purchase this home and continue to make payments. Okay. They'll order the appraisal. So the appraisal on a home basically means that the home is worth what you are contracted to pay for it. And in this market with multiple offers and people offering more than asking price, the appraisal really becomes kind of the reality check for a lot of sellers, right? It's great that a buyer wants to offer you $200,000 for the home, but if it only appraises for $175,000, that is all that the lender will allow you to borrow. So unless the buyer is willing to bring that additional money to the table, the seller would need to lower the price. And it gets a little tricky when the appraisal comes back really low, because they would then have the opportunity, if they wanted to, cancel, saying that they didn't want to negotiate. So we do a really good job of trying to run the comps and make sure that the home is worth what you've made an offer on, so that we don't have that problem with the appraisal. Okay. And then once the appraisal comes back, really all we're working on is just the underwriting with the lender, making sure that everything is getting tidied up. The title company will run the title search to make sure that there is no unpaid taxes and no easement issues. If we're going to get a survey, we want to make sure where the property boundary is, and then you're on to closing. So that's the process there. Any questions on that? In the chat box, I don't see any questions. Okay.
Kathy,
So back to the offer. Yep.
I'm sorry,
Go ahead.
Shauna again.
Yeah.
You mentioned about the current market. Oh, I think you're going into it.
We're going to get there. Okay. I know what you're getting at. We're going to get there.
Thank you.
So going back to the offer, we kind of walked through the timeline, but let's go back to making the actual offer, right? Because a lot of people go, this is a wonderful home. I know how much it's listed for, but how do I really know how much to offer? How do I really know that their asking price is worth what it's worth, right? So what we're going to do is we're going to pull the comparable sales. And this is kind of like what an appraisal will look like. They want to know what homes have sold within a half a mile or a mile radius of the home within about a 90-day period. Sometimes they'll go a little bit further back if there haven't been enough sales, but I want to compare really apples to apples. So if you're looking at a ranch home, I'm looking at ranch homes. If you're looking at a two-story, I'm looking at two stories. It's kind of uncommon that we would compare a two-story to a ranch home unless there's not enough. And in that case, what they're going to do is subtract based off of square footage, based off of bedrooms, the garage, the lot space. I mean, everything comes down to a dollar value, right? So what we're trying to do is make as few changes to that, that appraisal, that adjustment, because we want to compare apples to apples. So if your neighbor has the exact same home as yours and they just sold a month ago, that's your perfect comp, okay? We're going to read the seller's disclosure. So every home that is listed by a seller is required to have a seller's disclosure unless they haven't occupied the property. So like investors or somebody that uses the home as a rental, they have to disclose that it has or hasn't been occupied within a certain time period. Maybe the updates that they've done to the home since they've owned it, but they may not know if there's foundation issues or if there's been water in the basement. So really you want to read the seller's disclosure to see what they're disclosing. And if they haven't disclosed it, make sure you ask, okay? It really becomes important to homes, especially like foundation issues. Have you ever had water in the basement? Well, if they say no, and after you purchase the home, you find out that they had tried several times to remediate water in the basement, you know that they've lied, okay? So ask, ask, ask. Know the home's age, know the condition. Kind of when you walk through the home as a buyer, look at what's going to cost you money, right? Do you need to replace the roof, the water heater? Do you need to do updates to the kitchen, to the flooring? All of these things are going to be an expense over time. So as you're walking through the home, start adding up in your mind, what is it going to cost me to get to to get this home to the condition that I want it to be in, or that it needs to be in to be livable, okay? How long has the home been on the market, and how fast are other homes selling? So really in this market, homes could potentially be going pretty quickly. But if it's been on the market for a couple of months, number one, what's wrong with it? And number two, what's the issue with the seller that they've been on the market? Have they received offers that they haven't accepted? You know, all of these things will help you determine how much to offer if you know that they've received offers and haven't accepted them, okay? Are there multiple offers on the property? And this is really big right now, unfortunately, in all homes that are kind of under the $300,000 mark, is there are just so many buyers that are looking at the same properties, and really the sellers and the realtors are holding them until the weekend. And so everybody's looking at them all at once. And what you will see is we're holding offers until Sunday, or we're holding offers until Monday. Give us your best offer. Okay. And so what you want to at least plan on is there's going to be at least one more offer that you need to compete with. So make your best offer. Okay. Don't count on them coming back to renegotiate or to counter back at you, because they may have a better offer that they just accept. Okay. Know your financing options and your limits, and really get pre-approved so that you understand what your limits are. If you are qualified for $190,000, do not be looking at a home that is $200,000, because I will guarantee you, you will not get it in this market, unfortunately. It is just not a time that you can offer $10,000 less on a property and still win the contract. There are a few exceptions. I will not say never, never say never, but know your financing options and your limits. If you're looking in about a $150,000 range, or whatever your range is, maybe look a little bit lower so that you have the ability, if you need to offer above asking price, or if you need to come in and do repairs, you want to have in your budget that ability, that little bit of wiggle room. Okay. Know the seller situation and their motivation. And this is really key, especially in this market. Ask the seller what's important to them. Ask, why are they moving? Are they building a new home? They need a longer timeline. I mean, really, you can cater your offer to what the seller needs just by asking what they want. Okay. And again, just be prepared to offer your best offer. I would hate to have you fall in love with the home and make an offer that is not strong enough, and then you are regretting that decision because every home that you see just doesn't match up to that home. Okay.
Kathy, it's Lori.
Yes.
Is there like a rule that says that the seller's agent can't disclose that information, or do you recommend having that conversation with the agent for the seller?
It never hurts to ask, right? If you don't ask, you don't learn. But really, right, the seller is required to, the seller's agent is required to represent their seller in the best way possible. So if the seller says, I don't want to disclose that we have multiple offers, or I don't want to disclose XYZ, that's really between them and their listing agent. But if you don't ask, you don't learn.
Awesome.
Okay. I also look, as a realtor, I look back at past listings. So how long has the home been on the market? When did it last sell? Can I go back and find photos of the home when it was listed last time? Can I look at the tax records and see, I don't know, maybe they've done some renovations, or you can talk to your home insurance company, see if they've had home insurance claims and they've had, a new roof or things like that. There are lots of ways to find out information on the home. Okay. As a buyer's agent, if I know something about the home or the seller, I am required to tell my buyer. As the listing agent, I am required to represent the seller unless it's a legal obligation. Okay.
Got it.
Kathy, for you, Kathy, and anybody, any of the other realtors on, when in this current market, when you're working with somebody, a buyer, and you've talked a lot about give your best offer. Are you are you working with them one-on-one with that? So you're sharing it today because we're sharing a general presentation. But when you all realtors are working with your clients, are you saying, hey, this is what I recommend you can likely offer, is a reasonable offer, or are you just letting folks decide? Like, can you talk?
We're going to get there in a second. I've got a couple of tips on how to make an offer attractive. Okay. I have worked with buyers that are pretty strong. I'm just not going to pay full price for a home. And sometimes it takes them multiple offers to figure out, okay, this tactic isn't working. In some homes, I say, hey, if we go in on a Tuesday and they've had nobody else look at the home, they have no offers in hand, maybe we can make a little bit lower of an offer versus on a Sunday evening and they already have 10 offers, right? So this is where it comes into the buyer's agent really talking with the seller and the seller's agent to get more information and figure out what situation you really are in. right? Okay. We're going to talk a little bit about the sales contract. So once you write a contract, there are several different items that we will cover in the contract. And again, I'm happy to provide a copy if somebody's just curious what it looks at. But it's always the buyer's agent's responsibility to educate the buyer about the sales contract. So you should, again, never feel pressured to sign a contract. Always ask questions and have a chance to review them before you even sign it. Okay, so I will go page by page, either in person or everything's happening electronically now with COVID. So I can FaceTime with people and go page by page, give you the legal jargon, because I know for some people, layman's terms, just understanding what you're signing is really important. And so I give you plenty of time to make sure that you're comfortable with the contract. Okay. In essence, though, it's a pre-written contract, so I can't change anything in the terms, but what I can do is fill in the form. So what we're filling in is the purchase price that you're offering, the earnest money that you're making. And let's stop right there for a second and talk about earnest money, right? So when you make an offer on a home, the first thing that you're going to need to do is put up some earnest money. That money gets held in escrow. It's your money throughout the entire contract. But what it represents is your good faith in this contract. So generally it's about $1,000 or 1% of the sales price, depending on how much, the home is worth. Sometimes you can get a little bit lower if the home's a little bit lower value. So really what you're going to do is within 3 days of an accepted sales contract is write that check out to the title company. It will get deposited in escrow and held until your closing. Okay, so make sure that you prepare in your budget to write an earnest check when you write your contract. What's included and excluded in the home? So a lot of first-time home buyers are going to ask for things like refrigerators, washers, dryers. Sometimes you'll get a home that has like a swing set and you don't have kids, you don't want the swing set. Write that into the contract, because if you don't exclude it, the seller can leave it. Okay. Be very careful with personal property, because lenders will say they don't want to see a lot of personal property on a contract. So really kind of limit it to the basics. What's your loan contingency date? So basically 1 week from closing, you're going to have your loan commitment due from your lender. What's your closing and your possession date, right? Normally it's about 45 days from the day you write the contract that you want to close, but there could be a change in that plan. Maybe the home is vacant, or maybe the seller has another home to purchase and they need a little bit longer time. These are all negotiation points that you can talk through with the seller. Okay. It gets a little tricky, but there's also an option if you wanted to rent the home before, or if the seller needs to have possession of the home after closing. I don't recommend it because it gets messy, but there are some different options for closing and possession dates. Your inspection period is generally 10 days, and then you get additional days to resolve it. Your insurance period, you'll have about 10 days to get your home insurance squared away and make sure that the home is insurable. There's additional riders that might be attached to the contract depending on what type of loan you have. So if you've got a VA loan or an FHA loan, those have separate riders that cover you, basically to make sure that the home has an appraisal rider and has certain contingencies for those types of loans. If it's a condo, you want to make sure you get a copy of those HOA restrictions, and that also they have resale certificates for the condos. Obviously, if you're going to include an appraisal in the home that's required by your lender, you need to have an appraisal rider. And then there are contingency riders too, if you need to sell your home, for instance, or if you are already under contract on your home. There are different riders that legally write those contingencies into your contract. Are you going to order a survey? When you're looking at a home and writing the sales contract, you have the right to purchase a survey and make sure that you know where the boundaries are. Okay. One important thing is if the seller provides you a copy of that survey, you want to make sure that it has any additional improvements like decks and fences on that survey, or otherwise it's obsolete, and that it's at least less than 10 years old. If the survey is older than 10 years old, the title company will not insure it. Okay. And the survey is about $400, $500, depending on the size of the property. So these are just things that you want to think about when you're writing a contract. Any special agreements. So these would be things like Escalation clauses, we'll talk about that later, but any kind of special agreements that you're including in your sales contract, okay? And then seller paid closing cost. So we went back to the idea of having at least a 3% down payment and then additional money for closing cost. You could potentially ask the seller to contribute some closing costs to your contract so that you have a little bit money less to bring to the table. That is something that you can certainly ask the seller to contribute. They can say no, but it doesn't hurt to ask. Any questions there so far? Okay. So once you have the contract, then you'll go into your inspection period. Okay. You have 10 to 12, 15 days, however many you write into the contract to do your inspection. And you have the right to do any home inspection that you want. Okay. I recommend using a company that is certified by ASHI, which is the American Society of Home Inspectors. It's basically a national gold star standard for a home inspector. Gives them a full checklist, basically, of what they're looking for in the home. And it's a standardized checklist so that all inspectors will generally have, kind of the same type of report. But customer service is always important when you're looking for companies. And so I've got a variety of companies that I refer. Always ask your friends and family who they've used and if they were happy with the service. Okay. A home inspection will really uncover any problems with the home structure. So they're going to go from roof to foundation, and they're going to go through their checklist, check the plumbing, check the electrical. They're going to check the safety of everything in this home. They're not really looking for cosmetic things, but what they're looking for is the health and safety of the home. Okay. You have the option to purchase a termite inspection. And really, that's required for some of the loans, like a VA. Sometimes FHA will require it. But that could potentially uncover some devastating termite infestation, maybe even some wood damage or foundation issues. Okay, so for $75, I think a termite inspection is well worth it, especially if there's active termites, because then you can ask the seller to go ahead and do a termite treatment, which would save you a lot of money down the road. Roof inspections are generally free from a roofing company. Your home inspector will do a basic roof inspection, but if he sees anything that's a little bit more in depth, or maybe there's some repairs that need to be done, call in a professional and have a roof inspection done. Okay. Gas inspection is a thing that people pass up quite a bit. And I can't tell you how many gas leaks we have found just by doing a gas inspection. So Spire will come out and they'll take care of any leaks that are found, but you have to pay for the gas inspection. Radon and mold. So mold, not so much unless you're seeing visibility of mold or an inspector says, hey, I think you need to really investigate this. But radon gas, I do want to touch on really quickly. So radon is basically a naturally occurring gas underneath the ground. And what happens is it's a cancer causing gas if it is trapped in the living area of a home. So we would test for radon. It's about $175 for the test. And if it comes back high, what you could do is ask the seller to pay for a mitigation system, which is basically a negative pressure vacuum that would suck the gas from under the ground out through the roof and out of the living space. So you are no longer receiving those cancer causing gases in the house. Okay. It's really important if you're going to have a finished basement or you're going to have people live down in those lower levels. Sewer, septic, well, these are all things that are optional, but if you live in an older home, you would definitely want to have a sewer inspection, because if there are issues in your sewer, in the sewer lateral, there are programs that could potentially help you or help the seller remedy that, or save you lots of money in costly repairs down the road. Okay. Older homes that are not on public water or septic, they will have their own septic systems or their own wells. Those come with a whole other set of inspections and maintenance. And so you just want to make sure that you are educated on the systems that are in the home when you're purchasing it. That's really the biggest thing about a home inspection, is it's not just to find what's wrong. It's there to educate you as a home buyer on how to maintain and how to keep these systems going. Okay. you don't just buy a home and live in it. You have to continually do repairs and do maintenance. So you want to know how to do that kind of maintenance. And then in certain municipal areas, they do have like a city occupancy inspection or a fire inspection. Maryland Heights is pretty stringent. I know Florissant's also stringent. Dardine Prairie, they've got one. Lake St. Louis does have a fire inspection. And so this is just for the realtor to figure out what requirements there are from the city or the municipality that the home is in and what's required. Okay. Any questions on that? No. Okay. No questions. Shop for home insurance. So same thing as mortgage companies. What you really want to do is talk to somebody that's local. Get to know what's covered and what's not covered, and let them look at the home listing or even go out to the home and figure out what insurance is going to be best for you and for this home. Okay. Not all policies are the same, and you may be getting a lower quote online, but it may be taking out something important that you really need for that home. So the biggest thing would be like sewer water backup, or flood insurance, earthquake insurance. You know, not everything is standard. And people in Missouri, they don't remember that we're on a fault line. So if we were to have a big earthquake here and you don't have earthquake insurance, your home is not covered. Or if you have a septic backup, or your sump pump overflows and you don't have water backup insurance, you're out of luck and you have to pay out of pocket for those repairs. So that's really something that you want to talk to your insurance rep about. What details are in the home that need to be covered, finished basements, older roofs, things like trampolines. People forget, you know, that you're liable for anybody that is on your property. So you want to make sure that you have adequate home insurance to cover everything that is there. Okay. You have about 10 days within that accepted contract period to make sure that the home is insurable. And if for some reason it comes back that the roof is too old to be insurable, or there has been a past claim that wasn't rectified, you want to know so that you can come back and you can negotiate that with the seller. Okay. Bring all your policies together. So if you're just getting married, or if you've got car and auto and life and everything's kind of scattered, bring the policies together, shop around, ask for loyalty discounts, ask for first responder and teacher discounts. For sure, this is a time that you want to ask for every credit that you are qualified for. Okay. Any questions on home insurance? No questions. Okay. Let's see here. Home warranty programs are really great, but again, you want to look at the home to see if your home even needs a warranty. So if you've got a lot of new systems, new furnace, new roof, new appliances, maybe they already come with their own warranties and you don't need a holistic warranty program. But if the house is a little older and maybe the AC is going to need to be replaced in a few years, or you know, there's going to be a few things that are going to come up within the first few years of home ownership, you may want to consider looking at a home warranty program. Okay. And basically what it is a 1-800 number that you call and you pay a flat fee for that service versus an hourly fee. Usually about 1 year contract is anywhere from $500 to $900, depending on the program, depending on the upgrades. But if you can ask the seller to pay for the first year and get that free because you're expecting to have some issues with some of those appliances, then you might as well ask for it. Okay. If they say no, you can pay out of pocket, or you can figure that out later, but it's definitely worth looking into to see if a home warranty plan would be right for you in this house. Okay. Disclosures. Your lender, Lori, I'm sure you'll continue to tell buyers that you're going to disclose throughout the entire home purchasing program. And really what it comes down to is the Truth in Lending Act and RESPA, which is the Real Estate Settlement Procedures Act, that basically they are going to disclose what your fees are, what your monthly payments are, and ultimately everything that you're going to owe before you sign that final contract. Okay, so you're going to continually be getting these disclosures from your lender prior to your closing, and generally about 3 days prior to closing, you'll get the final disclosures. Any questions on disclosures, you should always ask your lender, and don't be afraid to ask those really hard questions about lender fees and credits, and to shop around before you get a contract, because once you're in a contract, we're working towards closing. So I don't want to be hearing you shopping around for a lender a week before closing. That happens before the home search process.
And like Kathy said, there are laws. They have to give you your final disclosures before you sign those documents. So you have time to go through them and ask the questions and make sure that you understand exactly what those things are. And the fees, our fees as lenders, our fees are all set. I could go through line by line and tell you what my fees are. There are some other things like the title company and the insurance, those things that you shop for on your own, those could fluctuate some, but once those final disclosures are out, you're solid.
And this is usually what I put towards like the planning phase of everything. When you're talking with a lender, we can kind of plug in numbers and I can tell you what the average closing fee could be. But that's really for us to kind of, figure out before you start shopping for a home, because I don't want you to come to me a week before closing and say, oh my God, I didn't realize it was going to be this much. I never want to get that far in a process and realize that it's out of your budget. Okay. So really what we're going to talk about now is understanding the closing costs. So the first out of pocket is going to be your earnest deposit. Remember that check that you wrote when you wrote the contract? Okay. That's out of pocket. The second one, the prepaid, is going to be perhaps an appraisal. So some lenders require you to pay the appraisal when you order them. Some require you to pay them at closing. It just depends on the lender. Your home inspection will generally be paid out of pocket. That's a prepaid fee. You could potentially, get reimbursed. There's options that we can talk through, but that's going to be paid for before closing. And then at closing, what you're going to pay is your down payment. So 3, 3.5, 5, however much your down payment is that you've talked to with your lender, and then your closing cost, which could potentially be an additional 3%. Okay. So the total that you're coming to the table with could be a minimum of, 3, 6, however much percent you've chatted with your lender about what the requirement is. So the 3% closing cost is made up of a bunch of little things. Okay. In there is going to be your first year's home insurance, because you're prepaying your home insurance. And then you're going to pay taxes, and then you're going to do an escrow account with your lender. Okay. Amongst all of those little, everybody wants to get their hands in the pot, will be your survey fee, your processing fee, the underwriting fees from the lender, if a lender has a flat fee. If you've got a VA loan, you're going to prepay a funding fee. A lot of people that are looking at MHDC loans don't realize that there's an upfront funding fee in order to get that down payment. Okay, so there are some prepaid fees there. You can pay loan discount fees, which means you're basically paying for a lower percentage, origination fees, recording fees, settlement fees, document fees. If there's a lawyer involved to put things in a trust, they charge you for a fee. The lender is going to escrow for your taxes. And so I let them deal with, however much they're going to escrow. Usually it's about 3 months, 3.5 months of taxes. Your title insurance. So this is the biggest title fee. You're actually paying insurance that the home that you're purchasing is going to be free and clear of any deeds or any like liens on a property. Okay. There's going to be no crazy Aunt Edna that's going to come back and say, hey, I owned half this property and I didn't get my money, because you paid the title company title insurance to transfer you a free and clear deed. Okay. So if somebody comes back and says they were owed something on that property prior to its transfer, the title company will take care of that. There could potentially be prepaid interest. You're going to pay a credit report fee, your first year's homeowner's insurance, taxes, I think we mentioned. So taxes, from January 1st through the day that you close, the seller is responsible for paying the portion of the taxes that they lived in the home. But from the day that you purchase through December 31st, you as the buyer are responsible. So you may potentially, have additional taxes that you're paying in there in amongst with the escrow. Depends on when you're buying the home, what the math is. Obviously, if you're purchasing on December 31st, you make out a little bit better than if you're purchasing in April. Okay.
And Kathy, one thing that I will say is a lot of times in that closing disclosure, you actually will escrow that full amount and then the seller will credit you their however many months they lived there. So if you take the annual taxes and divide it by 12 and they live there 6 months, they'll credit you that 6 months towards, so that goes towards your amount. So
yeah,
it's a little confusing when people are going through the closing docs. So that's what we're here for,
do
right?
the math.
Yeah.
And then people forget too, there's homeowners insurance or homeowners association fees and attorney fees and things like that. So we try and average everything out. Generally, it's about 3% of the total sales price. If you get a little bit less of a quote on insurance and we can save you some money on the lender fees, it could be a little bit lower. But I would generally calculate 3% for your closing cost. Okay. If you're asking the seller for closing cost, depending on the loan, you may have a max number. So like Lori helped me out. I think conventional would be 3% and then FHA would be 6%. Or is it vice versa?
No, that's right.
Yeah. Okay.
Yeah.
Not saying that you could get a whole 6%, but legally that's what your lender would allow you to do.
Yeah.
So there is ways to get creative. Okay. So do we have any questions right now on the closing cost?
I do. This is Jessica. What about if you are trying to do the down payment assistance? How does that figure into your closing costs? I heard you said that there may be some prepaid fees for that.
Yeah, so there may be, and again, you have to work with your lender because different down payment assistance programs will have different requirements. Generally, it goes to your down payment a bit. It won't necessarily cover all of the closing costs. There is fine print basically on what it can and can't cover. So I leave that to the lender of how they can get creative to use everything. Some of the down payment, you have to have $1,000, I think it is, invested. So whether it be your earnest money or the home inspection, there's a minimum amount that you have to invest and then they'll cover other things. So you have to read the fine print and work with the lender to figure out what you can use and what you can't.
Okay.
Good question though. Mark, I saw your question. I'll go ahead and answer about the survey company a little bit later. Okay. Any other questions on fees? No. Okay. We've still got a couple more slides, so don't worry. I'm going to go back to some of those questions. But basically, after closing, what happens, right? There are a few things that I would recommend to be a healthy, safe, and smart home. The first is change the locks. So you don't know who has keys, who has the garage code, who's been in and out of the home. Neighbors have been watching it since it's been vacant. Change the locks, okay? Introduce yourself to the neighbors. You'd be surprised what you learn about a house when you talk to the neighbors and what they've been watching happen. Review your home warranty coverage. So what is new and still has warranties? What is maybe covered under a home warranty program? What's covered under your home insurance? Sometimes they have additional coverage there. Really keep a binder from the day that you own the home with all of the repairs, all of the updates, how much you've spent on the home, so that if you ever go to sell, you can say, this is how much I've improved the home, or these are the things that I have done. Okay, just keep those all in a binder. And then if you've not done it after the inspection, service the gas, service the fireplaces, service the HVAC. You don't know what's been going through those filters, change the air filter, and just make sure that it's a healthy, safe home when you move in. Okay. Stay in touch with your home insurance company for any improvements that you've done. There's always ways to save money. So you just want to, make sure that any improvements that you do to the home, you're getting credit for that. And then always make a list of home projects and maybe vendors that you're looking for. And this is really important if you're going to be doing some home improvement projects, is make sure that you vet any vendor that you're going to hire and invite into your home. So whether you're looking at the Chamber of Commerce or the Better Business Bureau, make sure they're licensed, make sure they have reviews, make sure they're credible vendors, and that one, they're going to be safe to come into your home, and two, that they are knowledgeable about the types of improvements that you're doing. okay? You just hear too many horror stories about people making a big payment to somebody and then they never show up and do the work. So we want to prevent that from happening. Okay, so now that we've kind of walked through the whole home buying contract scenario, let's go back to the market, okay? And really, it depends on where you are and what day it is of the week. So St. Louis City has a different market than St. Charles County. And I'll be the first realtor to tell you that I don't work all real estate markets. I certainly go a lot of places, but I don't know a lot about South County. So, really find a realtor that's going to understand where you're looking so that they can know your market. Make sure you're talking to an expert about the area that you want to purchase. Okay. Right now, people always say, oh, it's fall, kids are back in school, families may not want to move. Well, things have changed now that everybody is kind of up in the air. Maybe they're doing virtual schooling, maybe they're, homeschooling. This year is a little bit different. And so we're still seeing people moving during the school break, but that could potentially change. And you may see a little bit of a quicker market either in the winter or in the springtime, just as school is starting to end. COVID-19 is definitely presenting some challenges. So for a little while, the government had been shut down and we were starting to see delays in like recording times. St. Charles County, I know that they're not doing occupancy inspections right now. So that's a challenge. Showing, obviously, we're still wearing masks. We're still, following all of the protocols. And so if health is definitely a priority for you, talk to your realtor about how you can make this a safe home searching experience. Lori?
I just wanted to point out, so like USDA, things that require additional approvals through loans, the turn times on those are generally 1 to 2 business days, and we're looking now at up to 3 weeks because of COVID, and MHDC as well. Any of those organizations that are state or government based, really turn times are being hit really, really hard. So just so people are aware, even though we may not be seeing the direct effect here, there is a huge effect on the lending industry as a whole. So
yeah, so definitely that's a good point, Lori. Definitely anything that has to do with the government. If we were to have another shutdown, we could potentially see like MHDC, FHA offices starting to shut down and maybe not accepting contracts or applications. County offices, local offices, even the title companies for a while. Some are still doing even curbside signings. And so the whole process has definitely been affected by COVID-19. And again, that's for your realtor to educate you on how it impacts you directly with your loans, okay? The biggest market update right now is obviously the shortage of affordable inventory. So one of the challenges is that people who own those homes are not finding homes to move into. So it's kind of slowing the turnover down, right? It's a domino effect. When people can't sell their home to move into another home, there's nothing for first-time home buyers or people who don't own a home to purchase. And so what we're seeing is just a slow turnover of the market. And unfortunately, that's frustrating for people because they want to move quickly, right? Maybe your lease is up and you're like, okay, I need to find a house by January, but there's nothing on the market that you want to purchase. So we need to talk about, can you rent month to month? Can you do a temporary housing situation? Can you live with family and save up some money for a down payment? There's a lot of different options that we can talk to while you're home searching, because my least favorite thing to do is for you to purchase a home that you're not happy with because it's the only thing on the market. Okay. I really want you to take the time to purchase a home that you're going to be happy with for a long time. And if it takes a little bit longer to do that, unfortunately, that's what we need to do. The weekend frenzy, obviously sellers are in the mode to get as much for their home as possible, and realtors are kind of, unfortunately, I'll admit it, we're contributing to the process. So you'll see a lot of homes popping up on Thursday and Friday, and then they're holding an open house on Sunday, and then they're reviewing offers after that. So what you will see is a little bit of a weekend frenzy, but that doesn't mean that something won't pop up on a Monday and be available to go pretty quickly to see. Okay, so just work with your realtor to make sure that you're seeing everything as quickly as it hits the market. Unfortunately, you do need to make decisions fast. So this is one of the important things about having already talked with your lender about your pre-approval, about your finances. You've got all of that tidied up so that when you find the home that you are happy with, you can write a contract quickly, okay? Sometimes people like to sleep on it overnight, and unfortunately that home that you thought about until tomorrow was sold yesterday because somebody didn't wait overnight to make an offer. So you kind of have to make a decision quickly. And again, work with your realtor to find out more information on what's happening with that listing, what's happening with that seller, what the timelines are so that you don't miss out. Competition drives up the prices. So when you do see multiple offers, really what you're seeing is people who are making sometimes crazy, but sometimes really supported by the market, strong offers, okay? Interest rates are really low right now. That's why there are so many buyers coming out to look for homes, is because interest rates are record low. Okay, it's more affordable right now than it was this time last year. I mean, we were seeing, Lori, weren't we seeing interest rates like 4.5%, almost 5%, and now they're kind of hovering around 3%.
Yeah, I'm actually in the process of refinancing someone who built last year. They closed in December. They haven't been in their house a year, and they're at 4.25. And we're going to be able to get them down just below 3.
Yeah, it's awesome. Okay. And then the biggest thing about the market right now, and sometimes people ask, you know, is it time for me to buy a house? And my question for you is, can you afford to overpay for a home that still needs repairs? Unfortunately, this is the biggest thing when it's a seller's market and prices are so high, but the homes still need to have some work done, or they're just not there cosmetically. You know, do you want to get into that situation where maybe you owe a little bit more on a home than what it might be worth next year? So you really have to work with your realtor to understand what's happening in the neighborhood, what's happening with the home values, and make sure that you're building up the equity on the house. Okay. What makes your offer attractive? So, Shanna, I think this was kind of the question you had earlier, is when you're making an offer, how do you know what's going to be the most attractive? And really being pre-approved, actually being pre-qualified, okay? So the difference between being pre-qualified, or sorry, I had it backwards, being pre-qualified and being pre-approved is that they've already run your bank statements. They've already looked at everything through underwriting, and so they know that you are solid. Have your lender call the seller and say, hey, this buyer is like rock solid, nothing's going to fall through, they're good to go. Okay. The name of the lender matters. So we're not using like Joe Schmo Online, Rocket Mortgage, Quicken. You know, if somebody comes to me with a listing that I'm a listing agent on and they've got Quicken, I'm going to tell them to talk to a local lender, because I do not trust an online mortgage company. I'm going to trust a local person that has looked at their bank account. Okay. So really shop around and get a strong lender that can back you up and tell the seller that you are pre-qualified. Cash versus mortgage, unfortunately, there are people out there that can afford to purchase a home with cash, and they will win out because unfortunately cash does not require an appraisal. They can close a little bit quicker. They just don't have those restrictions that a mortgage do. Unfortunately, there is some discrimination against FHA, VA, USDA, and down payment assistance, because there are a little bit more requirements throughout the loan process. They also require that the condition of the home be at a certain level. There's minimum requirements to make sure that the home is safe for a government loan. So like FHA and VA will have an additional contingency on the appraisal of a visual inspection, okay? You know, sometimes sellers will see that and they just don't want to deal, or they know that there's something wrong with the home that they don't want to fix. And so they will choose a different loan just based off of that. So again, that's for your realtor to go back and educate you on that. If you're worried about the condition of a home, talk with your lender, talk with your realtor about what's going to hang up that process. Ask the seller what's important. Again, go back to, is the seller waiting to buy their next home, or do they need to move quickly, or do they need a little bit of a longer closing time? Asking the seller what's important and then writing that into the contract makes you a lot stronger than a buyer who doesn't even ask and just is asking willy-nilly for things that don't meet the seller's needs. Okay. being flexible on your closing time. So again, if the seller needs to close quickly, can you close quickly? If they need a 2-month closing date because they can't move into their next home, can you be flexible on that closing time? Sometimes not asking for closing cost. So remember, a price concession and closing costs are still out of the seller's pocket, right? It's still something that they need to concede. So would you consider maybe offering above asking price to basically finance in those closing costs? Okay, the home is $150,000 and you want $5,000 back in closing costs. Why don't you finance that $155,000, okay, to get your closing cost? If you divide that $5,000 over a 30-year mortgage and find out how much it actually is per month to finance that in, it could be worth it. Okay, I'm not going to say that the seller won't provide it. You just need to figure out what is important to them in what situation you're in. Okay. Putting down more earnest deposit. So for somebody that knows that they need to bring a down payment to closing, why don't you offer a little bit more of an earnest deposit and prove that you are serious about the home purchase process? Okay. My favorite, writing a love letter to the seller. This becomes really important, especially if you're trying to kind of tag emotionally to the seller. I love the home. It's going to be perfect for our family. You know, please consider our offer or whatever. Your realtor can work with you to come up with something that doesn't give away too much information about you, but that might be a good fit for the sellers and for that home. Okay. There are some red flags though. And again, this comes down to trusting your realtor. So when we talk about things that could potentially make your offer more attractive to a seller, that means what do they not have to give out? Okay. So escalation clauses are really important or really kind of common right now. And the way that it works is kind of like eBay. So the home is listed at $150,000. I'm going to offer you $150,000. But if you get multiple offers above $150,000, I'm going to increase my offer by $1,000 up to a max of, and whatever your budget is. Okay, say you offer $160,000. So that means that they would have to have another offer, say it comes in at $158,000 and you offered $1,000 increments higher. Your max offer would be $159,000. Does that make sense? It's kind of like eBay. You're escalating the offer up to a max number. That could potentially be attractive to a seller if you're in a multiple offer situation. Sometimes they'll say we don't want multiple offers or escalation clauses. We just want a flat best offer. I would fear that you would be overpaying for a home. Say it's listed at $150,000 and you offer $160,000, but they only received one offer. So now you're paying $10,000 above because there were no other offers. Okay. It really comes down to, again, trusting your realtor and knowing the situation that you're in so you can apply the right terms to the situation. Make sense? Okay. Other people will kind of waive inspections. Never waive your right to an inspection, but if you want to purchase a home as is, that's great. Give yourself an opportunity if you get an accepted contract to go in and do a home inspection to make sure that there's no serious foundation issues or structural issues in the home. Never waive the right to find out information about the home. But you could, if you've already walked through the home as a buyer, purchase it as is, where the seller does not have to make repairs. Okay, be very careful about that. And again, make sure that you're talking with your realtor about what the issues are in the home. You could waive your right to a home appraisal. This is tricky because the lender requires a home appraisal. So what it means is you're essentially bringing more money to the table. Okay, say you purchased the home for $160,000, but it only appraised for $155,000. The lender will only allow you to finance $155,000, so that means you're bringing $5,000 more to the table to cover that difference. Okay. Again, it's not something that you want to do, but these are kind of tricks up the sleeve. There are other things that you can talk to with your realtor to make yourself more attractive, but these are just kind of the common ones. Okay, Shanna, does that kind of answer the question that you had about being attractive?
Yes.
Okay. And again, it goes back to what is in the home? What is the situation in the home? What is the situation with the seller? Trusting your realtor to help you make the strongest offer possible. Okay. And I think, if I'm correct, that is all that I have. So it's a lot to chew on. We did record this evening, so if somebody wants access to the recording, I'm happy to share it. But I am also happy just to kind of have a conversation with each of you one-on-one, to really, make sure that we are meeting your needs, and that your home search experience is tailored to you. So educating throughout the process, making sure that you understand the terms, making sure that you feel comfortable with moving forward with the home purchase.
Kathy, I shared my
Okay.
contact information in the chat box. So I don't know if they have your information or not, but if they don't, anybody is certainly welcome to reach out to me and I'll connect you. Or depending on what the question is, one of our other coaches that are present. So everyone should have my information, my email address, which is the best way to reach me. And I just wanted to make sure everybody had an opportunity to follow up if they want to. This was a lot of information and a lot of details. And so as you think about things, please reach out to me, send me an email. And let me know what your questions are, and I can get you to the right person, whether it's Kathy or anybody else, any of our other coaches.
Yeah, and we've got a lot of vendors too. So I think that's really important, is we're a community. So as you go through the home process, we've got recommendations for realtors, home insurance, home inspectors, survey companies, title companies. We've just got a wealth of people, mortgage lenders, and especially. So if you're looking for a referral or a recommendation, vendors, definitely reach out and we're happy to get you whatever you need. Cool. Well, thank you everybody for joining us tonight. I will, like I said, email this out, Shanna. So if you have anybody else that wants information, let us know. And I'm so grateful for everybody spending time with us tonight.
Thank you, Kathy. We appreciate it, definitely.